How are you all today? It's time again for us to look in accounts and see how we can increase our understanding of the concepts. And today we are going to be looking at incomplete records. I hope you have been having a good time. We know that this period of time, they are challenging times, but we are here for you. We know that many of our students, you are preparing for exams, and there are those of you who are learning these concepts to apply in your institution and businesses. We welcome you to sharing with us in another lesson. I want you to know that it is our desire that you do well, whichever way it is, whether it is for your work or is it for your exam, we want you to do well. At this time, we are going to be doing the second half of our work on incomplete records and single entry. Earlier we have done the first segment explaining the procedures that are needed to be done in order to really resolve matters relating to single entry. And we said single entries where the owner is simply taking a record of just how the transaction is affecting them, and not the double entry that looks at how the transaction affecting the two parties. All right. So we are going to be using now our time to determine profit and calculating and capital rather, using the statement of affairs. So from time to time, businesses will require to determine their profits and determine their capital by the information that they have given to you. So the accountant has the responsibility to take whatever information that is presented and formalize it and present it to the business owners. So we are using this exercise to illustrate this objective we have here today. And so this question indicates that the following are information from Joe. So the following are from Joe's books on the 31st of August 2010. And at that time, he had the following information. His cash in hand was 115, bank balance, fixtures, stock, debtors, creditors, and motor van. Now we are going to be using this information to find Joe's capital. The second information that is presented, we will be using to find the profit. So we have two sets of information, one for 2010 and the other is for 2011. So he had presented us these information or this data to use to determine his profit and to also determine his capital. The concept is that when we are going to be preparing the capital, we normally use the asset at start and the liability at start, and we apply the accounting equation, asset, yes, minus liability, to give you the capital. All right, shall we proceed on the matter now? So we're going to do the first statement of affairs. August 31st, 2010. All right, so we're going to put in the information. Now we are starting with the fixed assets. And our fixed asset, we have motor van and we have fixtures. So we're going to start. So our fixtures And the fixtures figure, 3,500. The motor van figure is also 3,500. So we add these two and we're looking at 7,000. Alright? So we have used motor van and we have used fixtures. We're moving now to our current assets. And what do we have now? We have stock. So the stock of goods would be 16,740. That is, yes, it is 16,740. That is 16,740. Our trade debtors. And our trade debtors figure is now, it is 11,890. And then, so we've used trade debtors and we've used stock, bank balance. Let's get that in now. Bank balance. And the bank balance is 2,209. Our next figure is cash. And our cash figure is 115. So we have used that and we have used that. Okay. All right. So we are to total this figure. We want to total this figure to give us. We want to get the total current assets. So let us now do the maths. So our total, when we add all of the current assets, would be 30,952. All right, so let us do a double. Let us double check that, please. All right, so in fact it is 30,952. We're going to let's subtract now our current. So we're going to less our current liability. All right, and in the question, our current liability would be the creditors. And our creditors figure would be 9,000 rather, 952. So we're going to subtract this now to get our what we refer to as our working capital. So now that would be 2. Which is where we write it because we're going to 0. That's 0, and that's going to be 1, and it's going to be 2, and so it's going to be working capital. So this is our working capital figure. We'll add the working capital figure with the total fixed asset. All right, so let's see what we get. This is still going to be 2, 0, 0, 7. This is going to be 8, and that's going to be 2. All right, so simply now we're going to be recording financed by capital, and the capital is going to be the same amount, the 2,800, 28,000 rather, and 2. So this is the statement of affairs, and we prepared it to find the capital, and this is the capital, right? This figure is the same because there is no other joints or profit to be adjusted. So the accounting equation would be used A minus L is equal to capital. If we add up all our assets and we subtract it from the liability, and we get the capital, which is that figure. All right. So we're now going to be moving to look at the second part of the question. It indicates that at the 31st in 2011, he had a new set of assets and liabilities, and we're going to translate that now and get it done. So now we are going to be doing the statement of affairs for the 31st of August 2011. All right. So now the new set of information for 31st of August 2011 indicates that he has joins, he had some winnings from pool, that he placed into the business, he had extra fixtures, and he also have cash, bank overdraft, etc. We're now going to apply. So let's get now to the question. So we start again with our fixed asset. And we're going with our fixtures once again. And it is indicated that we have fixtures coming from the previous period of 3,500, right? And he had extra fixtures, that is right here, extra fixtures of $2,000. So that is going to, this is the extra. So let me put it here instead. So it is the 3,500 plus the 2,000 rather. And that total fixture now would be 5,500. All right. This is a 5, yes. Okay. How did we get this again? From last year, he had fixtures of 3,500, and the question says he had extra fixtures of 2,000. So we're adding the 3,500 plus the 2,000 to give us a total of 5,500. In the question, they also indicated here that fixtures, depreciation for fixtures is $3,000. So at this time, we're going to subtract depreciation. And the depreciation for the fixture is $300, so we are going to do that now. When we subtract that, we are going to get 5,200. All right. Our next move is to deal with motor van. And the motor van figure he has here is 3,500, and we are told that the motor van figure this year is valued at 2,800. Now remember, last year it is what? Last year it is 3,500, and this year it becomes 2,800. What has caused the reduction in the value of the motor van? And definitely it is depreciation. So we're going to subtract, yes, the 3,500, 2,800 rather, from 3,500, right? And that is going to give us our depreciation. This was the cost of the asset, this is the book value, and we want the depreciation. Okay, so when we take that, we are getting, this looks to me like it is what now? 700. So the value of the asset that went down. Am I doing? Let's do it this way. All right, so it is 3,500 and 2,800. And we carry that over there. It's going to be 8 from that is going to give us what, 6? 15, no, 7. Yes, 7. All right, so it is in fact $700 as I had originally suggested. So it is $700. All right. So we're going to have the cost of the asset now is 3,500. We're going to less the depreciation and that is going to be 700, and we're going to have 2,800 here. That's how we get this figure. All right, we have to account for why there's a reduction in the valuation of the asset. Okay, now that we have done that, we can move to deal with the current assets. Our total current asset now, we're starting with the stock of goods. And that figure is 24,891. That's this figure. All right. We're now going to look for debtors. Do we have any new set of debtors in the question? Yes, right here. It is 15,821. So our trade debtors is 15,821. All right. We also have expense prepaid. You would have recalled when we were addressing accruals and prepayment of expenses that we indicated that prepayment of expense is a current asset, right? So this is a current asset. This item here, prepaid expense. And it is 72. All right. Let's now look for other assets. All right. Current asset. Now this is bank overdraft. So that is now what? A current liability. So we have only cash to be added. So cash. Let's put the cash in now. And the cash figure is 165. All right. Now we always make sure we do the check before we start. So, all right. So we have used, very well, we have used all the current assets. Our action now is to total the current assets and to see how much that is. Let us do that now. So when we add the total current assets, we are getting a total of 40,868. That's 40,868. Yes. Okay. We're now going to less or subtract the current liabilities. And we're starting with our creditors. Sit here. Our trade creditors right here. So our trade creditors figure is 6,002, and we also have expense creditors. And our expense creditor right here is 236. All right, and we also have bank overdraft, which is 165. $165. All right, so we're going to add these now to get our total current liabilities. So 11, 13, so this should be 3. Yes, that's 9, carry down 10, 10, and that's now 3, 4. Yes. And this is going to be what, 6? Yes. Okay. So we would have had, so the total, right? 6,403, and we're going to subtract the total current liability from the total current asset. All right, and what are we going to get? Well, the figure we're going to get would be called what? Our working capital, and that would be 344665. Pardon me. 34,465, and that is our working capital. All right, our next move is to add the working capital with the total of the asset, and that is going to give us our net worth, our net asset. So the total, when we add the total fixed asset with the working capital, we're getting 42,000. Yes, 42,465. Yes, we can double line this, and then we're going to move to look at the second half of the balance sheet. All right, we're going to erase this segment here to complete the question. So we're going to be starting with finance by. And that is our capital. And the capital figure, yes, we found that earlier, the capital figure of 28,002. That was the capital figure, 28,002. We're going to add now the winnings. Where is that now? Yes. He did say he won something and put it into the business. Yes, that was the pool right here. 12,800. So winnings from pool, and he placed it into the business. That means it is additional capital. Yes. That is placed in the business, so he's going to add. So we're going to add the winnings of 12,800. All right, that now is going to give us 208,034. Right? So it will be 40,802. Now, our next move is to add the net profit. But the net profit we don't know. We're going to put a question sign there. And we'll put another question sign there. Then we would have less or subtract our joins figure. The question tells us that joins figure is $7,560. All right. So there's a figure that we should subtract the joins from to give us our net worth, the net asset of 42, yes, 465. Good. Now, how are we going to be proceeding? The principle is that we add what we used to subtract and subtract what we used to add. So, in erasing this information right here, I'm going to proceed to share. All right. So, the net is 42, yes, 42,600, no, sorry, 42,400, 465. All right. We're going to add now the joins to it. And then we're going to subtract the capital, okay, to give us the net profit. That is this figure. Yes, the 42, this figure. We're going to be adding the joins to it. Then we're going to subtract the capital, and that will give us our net profit. So let's plug in the values. Let's rewrite it again. So 4265 plus the joins. Alright, and the joins figure we are told is 7,560, and we're going to minus the new capital figure, which is 40,802. And when we do that math, we are going to get the net profit to apply. Let's do that now. So when we do the math in relation to this calculation, we're getting 9,223. All right. So now we can plug in, we can remove the question sign and put in 9,223. When we add these, we're going to get 5, 2, 10, that's 0. And it's going to be 10 again, that's 0. Yes? And this is going to be 5. All right? When we subtract this, we're going to come back to it. So that is, so the business net profit is 9,223. So we would have worked out Joe's capital figure in a statement of affairs and also his net profit. Thank you very much. I hope that we have assisted in you understanding the processes of using the information, the incomplete records to prepare a statement of affairs or a balance sheet. We'll be looking at one other incomplete exercise to which will be a little bit more detailed, yes, with more adjustments, so that you can increase your knowledge. If you like this video, please click below the like button, and if it is the first time you're seeing this lesson from Kings and Queens accounting class, please you'll get notification when we are uploading new lessons. Thank you very much.